So I'm only really trading off of what I have up here on the chart, minor and major. If there's anything outside of that, I shouldn't, honestly, shouldn't be placing a trade, because what that does is that will get me emotional. And we can't necessarily take away all of the emotions, because we're human, and it's not going to happen. But we can help to do things to help us become aware of the emotions that could potentially take over our trading and, sabotage us along the way. And to do that, you have to put things together. You have to have a top-down analysis, that breaks down the context of the market. You have to have your major levels, and if you want to trade minor levels, you have your minor levels. And by the time the price action gets around those levels, you have to know what you're looking to do, right? And by if it comes into 39.70, I know what I'm looking for. I'm not looking for a long there. Could we get one? Sure, but that's my resistance area. So I'm actually looking for the market to reject 39.70, and when it rejects 39.70, that's the point in which I look for my setup to trade the short,
Mm-hmm.
right? Even though it could be this is where it becomes hard, because really anybody could determine how they want to look at the chart and whether they want to call it bullish or bearish. Not, it's based off of what that person is seeing, right? Because in the context of this whole thing, we're still bullish, but it could be different for somebody else. It could say, hey, maybe we're bearish. I don't know how you would get that, but it could be, but bottom line is price is moving to the upside, and this is one of the main peaks of resistance that we have. If this price hits this level here and rejects it twice, this is what I'm looking for my move to come back. And I'm going to look for it to come back here, and then I'm going to look for it to come back here, and then I'm gonna look for it to come back there, and then I'm gonna there, and then all the way back down there, right? There's areas I'm marking off. Why? Because prior peaks can become support on the way up, right? So you need to know not just where you're gonna look to enter, but where you're gonna take off some profits as well. All right. So that fundamental analysis, that top-down analysis that you do is important, because it helps you determine the type of trade that you want to take before you take it, right? It helps you understand the directional move that you're trying to put in on the market. And then from there, you can keep the rest of the stuff simple. Where do you want to take those profits? What are you looking for? How much points are you looking for? Try, try not to complicate it too much, but if you find yourself getting sucked into the smaller picture, um, I would always recommend to use a loop timer. Loop timer means that it's a timer that dings. Doesn't have to be anything loud or obnoxious, but something that gets you out of that state of mind that kind of is just like a, what do you call it? It's like a
Have it
drift
planned.
off phase.
Have it planned.
Yeah, yeah, exactly. Like it sucks you in so much that you kind of drift off of where the actual bigger picture idea is. And so when the timer sets off, you go back to your bigger chart. So you put on this 16 tick or something, and then you look at the context of the market, you look at where we're at, and you look at what would be the higher probability movement. If we're, say, up at 39.70, what would be the higher probability movement? Is it going to get all the way over there? Is it going to stall right here? Where is your trade at? That's what you want to ask yourself.